following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the fantastic Friday, October 16th edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one as well as an extraordinary weekend. The easiest way to do that, it's to always remember that life happens for us, not to us. That's right, folks. That one little 2x4 shift means that you and I can find the gift in every set of circumstance that life is going to throw at us. Today, we'll go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go make hay out of what it is that they're communicating to you and I, and I'm absolutely grateful for your presence here. I'm here to serve you. So feel free. Pick up that phone, dial on in, 877-927-6648. Be happy to put my eyes on your chart and assist you however it is that I can. Of course, internationally, you can reach out to us as well, 727-445-1044. This is Fabulous Friday. Of course, it's Tiger Financial Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow. She's trading up 18 points at 17,159. S&P is up a point at 2025. NASDAQ Composite down 6 points. Russell's off about 6 points. DAX closed up about 40. FTSE closed up about the same, about 40 points out there. Gold is off $5, trading at 11.82s. Silver is off 8 pennies. Light sweet crude up 74 cents. Lead the charge here to the upside dollar-wise. It is a Priceline. It's up $10. Boston Beer, Sam Adams, that's up $7. Valiant Pharmaceuticals up 8. NetEase up 6. Sherwin-Williams up $5. Alta Salon up 5. Yesterday, I don't think we got a chance in either of the shows really to take a look at any of the individual stocks that were moving. So we'll get that in today. Well, maybe we'll get it in today. Time will tell, right? Granger to the downside. You've got Granger Worldwide. That's off $15. Maybe they're out with earnings. So here's an equity. Sempra Inc. CEMPRA. CEMP is the ticker symbol. It's off 33%. Not only is it off 30%, it's in the biotech sector. We're going to go look at that stock because on the weekly chart from a couple weeks ago, that had formed a hammer, as did so many of the stocks within inside of the IBB. So we'll go get a feel for where that is headed to. But let's begin today, kind of a quiet-ish day, market relatively flat. So let's go see what kind of signals we have out here. And the signals, I'm going to just start here with, I haven't looked at this chart here for several hours, but that is the 5-hour chart here inside of the ES Mini. And what you and I can see at this stage of the game, we can see clearly how price has been moving higher. Even with yesterday's move, okay? Even with yesterday's move, price has been moving higher with less gusto, with less energy out there. And it is never a good thing. It is now, it can be resolved, most certainly. It is not going to be resolved today. So in this futures contract, it really can't be resolved, at least to the upside. When I say resolved, I mean it can go ahead and move up with some real nice energy, get rid of this pattern here, so that it doesn't exist, and then it's got all the room to run to the upside. But at this stage here, if we take a look at the course of this is a 5-hour chart, the last 20 hours, beginning with, last night. Now, the move going into the close out here, nice big candle, shoot, from about the, what time was it yesterday in the day? About 10:30 or so. Price most definitely took off the upside. But in the last 20 hours, we've got some really small-bodied candles up here. You got a little doji out here, just a sideways move into 4 o'clock this morning. A sideways move again, a little spinning. These are little spinning top candles out here. But the whole point is the body of the candle is the essence of price. And the essence of price here is an absolute timeout. Now, I don't know how it's going to resolve itself. We don't have much in the way of any kind of reversal candles or anything along those lines. So that's more bullish than it is bearish. But you've got a pattern that says caution, Will Robinson. Now, there's a new market profile that formed out here as we came into the 9 o'clock session, but it basically is similar to the old profile with one exception. We now can see that we've got the point of control closer to the resistance level. Now, price may just simply find support at either the top of that box. This is a daily, it's a 300-minute chart that we're looking at. So 2011 ought to be very good support. And if that doesn't hold the support, the point of control level, 2004, ought to be good support. Just getting back inside the range and underneath the TAS market profile high inside this 5-hour chart does not mean that, okay, we have a failure. You won't really have a failure until you at least get below the 2004 level. I don't know whether that's going to happen or not, but that's where you would then begin to have failure mode. And then the real failure mode would be down around the 1990-ish type area. So that's on the 5-hour chart for the ES. Let's go take a look at the 5-hour chart for the NQ out here, see if we've got anything, so in the case of the NQ out here, we can forget about a 7th wave pattern because that's not the case. Let's go ahead and update the wave counts here. So only potentially in your 2nd wave. As we speak right now, the candle that we're in, it doesn't end here for another 40 minutes or so, 42 minutes. That's the 2 p.m. candle. Right at this stage of the game, we got a little doji, we got a little bearish engulfing candle, but small-bodied candles out here, and that's always a sign of a market that's tired. Now, that market that is tired certainly has the weekend to regenerate out here. So nothing bearish yet inside the NQ on the 5-hour chart. Inside the Dow, which powered its way to higher price yesterday, it's also now, just like the ES Mini, it is saying, hey, not so fast, Steve-O. Not so fast, because it also has been moving higher with less relative strength, with less relative energy out there. No bearish sign. You can see a newer market profile. Now, in the case of the Dow, the difference in the setup that you and I looked at inside the ES Mini versus the new market profile, or it was either the ES Mini or the NQ. This one here, what you can see, I'll just blow this up on my screen for you, make it a little bit easier. You can see that this new box here, which just formed coming into 9 o'clock this morning, we can see that the point of control, little light blue area, is closer to the bottom of the box. So the Dow on a 5-hour basis won't fail until it closes below 16,000. Looks like 16,852 out there. It's quite a drop from where you're at right now at the 17,066 level. So that's what you would be looking at for potential failure. Now, there's other topping. I won't say there's other topping patterns. The price relative strength divergent pattern. If we see some kind of reversal signal, even going into the close today. What does that say? What I think you need to have more messages with regard to, for those of you that would be thinking the short side of the trade, you've got to have more messages. Likewise, on the long side of the trade, if you're on this trade here, you're inside on the long side. I'm not seeing anything here that says do anything other than always adjust your stops out here. Inside your trade. So that's what's going on across the, I won't say across the board because we haven't looked at the Russell 2000. Let's go ahead and look at it. Let's add this out here. And inside the Russell 2000, Russell 2000 doesn't look nearly as good as any of the other charts. Now, the Russell 2000 went ahead and made a price relative strength divergent pattern out here a few days ago. This is about 11 o'clock on October the 13th. We're already in the 16th, so 3 days ago. And just to confirm just how badly the Russell 2000 is, quite frankly, all we have to do, and we took a look at this on Tom's show yesterday. I believe it was Tom's show. All we have to really do is just take a look at the correlation between the small caps and the large caps within inside the Russell. So this is a ratio of the small caps, Russell 2000, divided by the Russell 1000. You can see how it's pointing back down. I mean, we've been making lower lows, lower highs. So that's not a good thing. This morning here, this thing has moved back down. It was only off about 6 points, so it's not off a ton. But as we take a look at it, in what the Russell 2000 or this ratio really does for you and I, it just tells you that you do not, if on a bullish market, you want to see this moving higher. You want to see this out in front, and we haven't seen that. We had one little pop yesterday, and it's over. Now, inside the Russell 2000, the upper portion of my screen, you can see that price really trying to break one of the shorter-term trend lines, and it just simply hasn't been able to do that. Let's go out to Martinez, California, and speak with our man Brent today. Brent, how you doing this morning?
Doing very well, Steve. How are you today?
Excellent, excellent. Did you ever do anything with the oil trade?
I'm just still hands in pocket.
Got it. Okay.
Scenario. Yeah.
Hands in pocket are good. We're taking a look at WIN today, WYNN with Brent, and this thing has been a dog up until the last about 2 weeks out here, where it had a nice pop. I guess the conference call that Steve Wynn gave yesterday was relatively straightforward and animated. But tell me what you're doing here and how I can help you.
I did do a white lightning trade this morning. I was able to pick up the monthly ones that are ending today.
Yes.
For the $70 calls I got them at 50 cents a piece, and I'm already out of that position. I sold them at $3.25 this morning.
Oh, great. That's great.
Did all that about 8:30 this morning, my time. I did buy some a little further out to November. I have some of the November 75s. I just, wanted to get your opinion on, I'm already all good with the one trade, and I'm doing okay with the second trade, and just thinking that it has some potential to maybe go up a bit further. Wonder your thoughts.
Well, yeah, so if we take a look at WIN, so they were out with their numbers, I think, what was it, last night after the bell?
It could even been this morning. I just saw it going by when I was watching,
Okay.
Going by this morning and thought there's an opportunity there, and it worked out.
Okay, so if we take a look at the WIN Resorts, and let's apply one of the tools to it, that being the market profiles out here. What we know about WIN, folks, is that this thing had been going south. I had the weekly chart up on my screen. We saw that it was really coming back into a breakout area, believe it or not, which was down in this $48 area. But what's nice is, as we take a look at the daily chart, whenever you come off of the bottom, WIN has the signature, the characteristic that each of us want to see in any equity that we would get into coming off of a bottom. And that is wide price spread and accelerated volume. And that's exactly what took place on the trading session of October 2nd, when it did 15 million shares to the upside. Now, on that day, price ran right into the resistance of its daily profile out there, and it was able to get above it the following day, had some nice volume. Not the wide price spread, but had some nice volume. And what price did, if I turn off these profiles here, just so you see, whenever you enter a trade, the very first area that your eyes should target from the reward to risk is the prior swing point. And that is, in essence, exactly, I'll go ahead and mark that across my screen out here with a little red line. And you can see how price just simply gravitated right back to that swing point out here. So we get back from this break. Let's continue taking a look at WIN with Brent, get his feedback as well as what he's looking at. And we're going to take a look at what the market profiles tell us today so that Brent knows where that natural resistance level is. This is Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 21, S&P is up 2. Going back out to Martinez, California, we're having a discussion here with Brent, taking a look at Wynn Resorts, WYNN, and the question is, Brent has some calls, some November calls. I believe they were 75. Is that correct, Brent?
Yes, it is, Steve.
So, so folks, so before we went to break, we were taking a look at, whenever you get into trade, one of the first areas you should always target and look at is going to be your prior swing point, which Wynn has done that. It's gotten up to that level. It's done it with, some nice wide price spread and accelerated volume. It's pulled back really just very slightly. Today, it had gapped down. It is off of the bottom. It's been moving higher since the open, so gap down, and we've seen volume accelerate throughout the day. Now it's tailed off now, but in the early stages, and that was basically a number of technicians or buyers that were looking at Wynn coming off the bottom and saying, "Hey, I'd like to get a piece of this action." It wasn't all Brent that was doing this out here, and if you take a look at it, it's got one of the other characteristics of Wynn is it's got a pretty gosh darn nice V bottom at this stage. Now, obviously, if this thing decides to pull back, that will just simply vacate. What I also did here, Brent, was I just took a look at the weekly chart and drew in a descending price channel just to see if there was any resistance out here for you. And those are the yellow lines on my chart when we go back to the daily, and that's well up into the 100 area, so that's not going to show up on your screen. I don't know why my system here is doing what it's doing, which is basically being very slow. So I might just have to ask you to tell me a joke or something while I wait for the screen to pop up. Do you know any good, clean jokes?
No clean ones, but some.
No clean. Well,
I
just
could try to clean them up.
Well, this is weird. Okay, there we go. I was going to say, when you get to the dirty word or what have you, or, just have to, use, we'll use a natural bleep. But look, let's take a look at the market profiles, which it's taken forever to go ahead and populate out here. It should come back up on my screen, and as soon as it does that, I'll give you those. But I don't see anything in the way, other than maybe when the market profiles show up, that will help us to identify some natural areas of where some sellers might be camping out. Without the profiles on my system, I don't see anything really that gets in the way of Wynn Resorts doing anything other than moving up into about the $97 area. Now, if the market starts heading in a southerly direction, that now it's going to have to, fight that off. But your market profile, your weekly market profile, is up at $80.72. So I would take a look at price as it gets up into that area, but you may be out of the options by then anyways. I don't know.
Yeah, I just, once I have a nice profit, I don't get greedy with stuff. Most of the things I do, I've been fortunate. I have, my average is probably 100% gain, and I just take that and I just, some are obviously a lot better than that. Some are a little less than that, but that's kind of the average. And I take that. I'm happy. I move on.
Yeah, for sure.
I'm kind of actually shifting my focus a little bit. I've been trying to I've been finding some stocks in the NASDAQ area that are like this one. This is not right off the bottom, but there's some others I found that are like that seem to be acting pretty well. So that's kind of more my focus. The oil thing, I have enough positioned in the oil sector, not necessarily oil itself, but stuff that's going to benefit from that moving up if it does keep going up. So I think that's all going to work out fine.
Yeah, no, that's great. In the case of Wynn, just one last thing that just sticks out at me is over the last couple of days where price has found resistance happens to be at the top of its daily profile, and that's priced at 76.48, and it's set up where it's in a really a bearish type position, meaning that point of control is closer to the top of the box. So it'll be a big plus for you to see this clear 76.48, but then it runs right into resistance again on the weekly in 80.72. But if it gets above 80.72, even though once you get to 100% profit, you'll think about taking, maybe all of them, or maybe you'll take a look at this one as maybe get your principal off the table. This thing could easily then, if it does that, if it clears that 80.72, it's got decent volume, I could see this, moving up into that $100 range out there, which would be a nice score.
It can be a big mover, this stock. It does some crazy stuff.
And have you ever stayed at a Wynn property?
I haven't, to be honest with you. I just, a lot of these things like the price line, I still have my eye on that one. I don't even fundamentally care that much about the companies. I'm looking at, different pattern setups and things that I hope are going to work for me. And, they don't all work, but, as long as more of them work than don't, that's what I need to have happen.
Absolutely. Hey, Brent, thanks so much for calling, and have a great weekend, and we'll look forward to talking to you again next week.
Do the same, Steve. You take care and have a great weekend.
Alrighty, that was Brent in Martinez, California. Dow's up 12, S&P's up a point. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. I mentioned during the first segment one of these stocks here, Sempra, CEMP. It's down about 36% out here. Let me see, what is the news behind it? I don't know. It says it announced a positive top-line Phase 3 result. So couldn't have been that positive. Was it supposed to be a negative result out there? But look, let's just go look at the stock chart. Actually, we're going to do a switch tabs on my system here that I've got labeled. And this was 2 weeks ago when the market on Jobs Friday came off of the bottom. And I know I shared this with you. The market went ahead and formed weekly hammer candles almost across the board. And it did that as well inside, what has been one of the weakest sectors in the market, which is the IBB. Now, with inside of the IBB, and I forget the exact number of holdings. Let's find out here. That way we can can kind of give you a feel. Partner links. Give me a moment here. Put up the IBB. This should tell us just how many. 141. So there's 141 equities that make up the IBB, and I could have put probably no less than 50 charts in this little screen here that we're looking at of weekly hammers that were formed. Instead, what I did was I went to, a hammer candle on its own, I won't say it doesn't mean anything, but it's not as important as when it's completing the pattern out here. And so what I did was I went through those 50 or so and picked out the best 8 So I could also have the IBB here to monitor, just in case we were seeing some kind of both with regard to breakdowns, because when you do break down below a pattern, when you break down below a hammer candle that completed a pattern, it carries with it a very negative meaning out here. Likewise, the market typically puts in bottoms in the month of October. And it may have done that here as well. September 29th, we're going to qualify as a October bottom out here. But take a look at this sample. Now, these are weekly charts that you're looking at on my screen out here. And it had formed on a weekly basis, just so you take a look at it. And this was a dangerous one. If you take a look at the A to B equals CD to the downside, a lightning bolt pattern. And remember, this was 2 weeks ago, so you don't have these two candles this week and last week to look at. But you can see it made the exact 1-to-1 A to B equals CD. It gets down to that price projection would have been 24.06. The actual low, let me turn on the data window out here. The actual low was 24 bucks even Steven out here. And that created a Gartley buy pattern. A Gartley buy pattern is where you've missed a large move in one direction, in this case here, a move to the upside. And what you want to do is you want to be able to buy that first A to B equals CD to the downside. Now, you form a big hammer candle like that, the reward to risk just isn't there. And what I mean by that is because if you had bought at the open on Monday, the next trading session out here, hammer candles, your best place to buy them are going to be in the somewhere between the middle of the wick, all the way, or the shadow, lower shadow, whatever you want to refer to it as, between the middle to the actual bottom, and see that thing get tested out here. The following week, by the way, we saw that price move lower. It was doing it with light volume. That's certainly not the case today or this week out here. It's taking that level out. And now, when you close below a hammer, the expression is, if you're long, you're wrong. Well, that most certainly is the case in the situation for CEMPR, CEMP. Now, you'd really want to investigate what in the heck, happened. I thought a positive phase 3 trial was good. I didn't read any of the details, but what it's doing here from an equity standpoint, it's coming right back to its breakout area. You can see the real breakout on a weekly basis. This took place out here on the week of January of 2015. We're below that level, but you see we've got a little bit of a gap here in a wide-ranging bar, and there was some decent volume on that week, 5 million shares, and the price point out there in that open gap, and that's certainly what it's at, targeting at a minimum. I would say that's 1448 to the low of 1495, so somewhere right around there. And look, this thing, if we pull this thing back further, you'd have to really, do a further analysis. But when you're coming down that hard and price is still on the inside on the A to B equals CD pattern, there's actually, I can find basically no reason for this to not get all the way back to all-time lows. So I don't know what I must have my results backwards, and if so. But what we want to pay attention to is, so here's our first major failure inside of the IBB. May be legitimate, may not. But if we take a look at some of these other equities as well with regard to their hammers, let's take a look at Agios Pharmaceuticals. I probably butchered that name. You've got an A to B equals CD to the downside here as well. Here's your hammer candle. That low was tested last week, and it held, which is positive. Now, the weekly candle, let's go take a look at the volume out there. The weekly hammer candle had 4.2 million shares, and last week you did 3.6, and this week you're doing 3.5. So you have not tested the low out here. And, this is also come, not only is this a Gartley buy pattern, but it's coming back into a breakout area with light volume. So this equity looks a whole heck of a lot better. 4.6 million, 6.5, 5.7 to the upside when things broke out, and you're pulling back with 3.6. 4.2, 2.6. So this one is actually, and that's ticker symbol AGIO, by the way. You take a look at what's going on a daily basis. But on a weekly basis, this thing is actually pulling back with light volume, or what looks like light volume. You'd really want to study that. Now, one that is actually completed and taken off to the upside, and taken off is a matter of perspective out here. But if you take a look at the hammer candle that formed inside this equity here, Rigel Pharmaceuticals, Rigel, R-I-G-E-L, ticker symbol is R-I-G-L, and we can see how price came all the way back to its breakout area. Now, this breakout area stands out. You'd look at this, the weekly chart, by the way, again, that we're looking at, and took off to the upside the week of February 23rd. The volume on that move to the upside out there was 21 million shares. And the idea is, if you just spend time buying breakouts or selling breakdowns, remember, you want to get the market correct. So the direction of the market, you need that working. You also need the sector to behave. But this stock here, if this sector, if we did put in a major bottom in the at the end of September, and I say I've got an email from a listener that would like my take on things, I will do that during Tom's show. Tom's still in Las Vegas, so I'll fill in for the 3 to 4 o'clock hour. David White probably will do the 4 to 5, I'm guessing, out there. You can give me the nod in the in my window out here. But in any event, so I'll be doing 3 to 4, and I'll put together for you. I'll just lay out my thoughts and the reasons why and what we would take a look at and what's changed, really, if anything, in the last 2 weeks out here. But in the case of Rigel Pharmaceuticals, this thing had broken out, as I say, with volume 21 million shares, and it came back with that sell-off and that hammer candle 2 weeks ago with 4 million shares. Now, that 4 million shares was going against really the breakout candle of 1.8 million shares. But you can see price continued to move higher the following week, even though it was a little bit of a high wave type candle out here. And it's been moving higher this week. It's nothing like a substantial volume or anything. Now, you could just really draw a trend line, just a simple trend line. That's what we'll do here. From the top candle down to the, come on, I don't know why it's, there we go, right? I'm going to have to reboot my system because there's something going on. But we can see that at this stage here, I'm using the top of the September 14th candle as well. Where price has stalled this week is right into that trend line. If come next week, and let's actually put this on a daily chart. Let's see if there's anything out here on a daily chart to assist us. But this one came back to a breakout with light volume. Formed a nice hammer candle. Says that the hammer candle, basically you're hammering out a low out here. It's moved higher where some others haven't. It's a low price stock. So look, there's a number of different ways that you could play this. The easiest way, quite frankly, to play, and I wish it had a high volume high. It doesn't. And I'm not telling you to go out and buy it. But somebody will probably do that just based on the analysis that I'm giving you here. And one of the easiest ways to play something like this, a $3 stock, let's say you had 10 grand or 100 grand worth of trading capital, and you wanted to risk, but you don't need to risk more than 1% on any one individual trade. So you got $1,000 to deal with out here. You could buy this as a unexpired call option. And what I mean by that, unexpiring call option, is you take that $1,000 risk, you divide it by $3, which is what it's selling at right now today, or whenever would be that you might buy it. That would give you about 333 shares, right? Something like that. And you buy it and you stick it in a drawer. You don't have to worry. Now, if you start to see this thing fall apart, you can get out. I mean, all that you could possibly be out on this trade is these guys going out of business, and you'd only be risking, 1%. Now, not that 1% is not insignificant, to your portfolio, but it would be a way to consider playing something like this. But you got to do some of the fundamental work and so forth. Nice big bar yesterday, 836,000 shares. So, we know that it was a good day for the IBB. Percentage-wise, this one might have been substantially better than the IBB and other equities with inside the index, the indice out there. But this one, looks pretty decent. But that's how you would play a low-price stock out here. Even when you're playing some of the low-priced gold stocks out here, like what are let me just a little brain fart. I can't remember the really low-priced stocks out there. But there's some of them. Like if they're priced a couple bucks, or like Goldfields, GFI. Here's another one. All right. Let's say that you are in the camp that the mining, that gold and silver have bottomed, and you want to play the mining sector. And it's made a major bottom. So you go check out Goldfields. You try to figure out, what other fundamental issues does it have out here. I think Goldfields, is that a South African stock? It might be a South African stock. And so, there's some litigation and issues that are pending out there. But it'd be the same kind of a thing. You could take 1% of your capital, just simply divide that by the purchase price, which right now today is $3. Again, I'm not advising you to do that, but I am advising you when you are trading in low-cost stocks, that is the easiest risk-reward trade. And then you're not spending your time, worrying about pennies as to where it is that you should be entering the gosh darn trade out there. Not that you don't want to try to time it, but let's also be realistic. If you had a long-term horizon, that's really what I'm referring to, these become the easier trades out here. To as far as what type of, it's all about position sizing when it is all said and done. In any event, as we took a look at a number of hammer candles with inside, now the IBB specifically, we might as well at least take a look at the sector. So let's go back and do that. The IBD, we'll finish it off this way. As we take a look at the IBB, what it was doing when it formed its hammer candle 2 weeks ago was really coming off against a shorter term trend line. That's a trend line from November of 2012. So that trend line is still intact out here. You know, when prices start to fall apart, they come back to support levels. And inside the IBB, it was that trend line. And oddly enough, or not oddly enough, we had a nice little hammer candle that formed the week that ended, or that began September 28th out here. You know, and that was actually, now there was a lot of volume on that. We haven't seen a ton of follow through to the upside, but that's the support levels with inside the IBB. Hey, let's go out to San Francisco to speak with Glenn. Glenn, thanks for calling. Thanks for holding. How are you doing this morning? Still morning for a few minutes for you, I think.
It is, Steve. Thank you. Doing well. Hey, I wanted to ask you, I heard you talking about the lower price mining
Yes.
stocks, so I wanted to ask you about Hecla.
Okay.
I'd gotten into that. It made a Gartley on a daily pattern, or actually it was a butterfly, and then it had two butterflies on a 30-minute chart.
Okay.
And so I got into it around 188, and it's doing well. And I wanted to see what you have for profit target. I was looking at around 275 or so. That would be the 618 retracement. And I got a stop around 2, and I was just wondering where you would place your stop and what you thought of the that stop.
Is it when you got into the trade, or even you're thinking now, is this a trade? Is it a longer term? What's your first? Give me your take on what your intent is, and then I can.
Well, it was when I got into it. It was a trade. The gold market was kind of waffling about where it was at, so I wasn't sure how long I was going to hold it. I was looking to get a half to 3/4 of a point out of it, and I'm about there now. But the gold market seems to be doing better, so I just wanted to kind of get your take on it.
Okay, so if we take a look at Hecla mining, folks, HL is the ticker symbol. Let's take a look at some of the positives here, just with regard to the equity itself. And that is the following. If we just simply take a look at market profiles, it's up above both weekly and daily. So from that standpoint, we don't see any natural walls out here just yet with inside of Hecla where it should find resistance. Now, this is very likely going to trade in the direction of gold and silver. So if there's a timeout here, the first level of support, which it's really not that far above, it's only about 4 pennies away right now today, is 248. Staying above 248 is nice and positive for you. The next level where this would pull back to is about the 234 to 240 area. And then you've got the actual breakout, we'll call it, that wide-ranging bar on October 5th, and there's a little gap between October 5th and October 6th. So that would be somewhere right around the price point of 221. Now, if it pulled back to 221, and I'm not saying that it is going to, but if it did pull back to 221, and you'll just have to answer this, so I guess we get back from this break, my apology, how would you feel? Are you okay with that? So think about that. When we come back from the break, we'll take a look at Hecla with Glenn in San Francisco. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Steve Rhodes here with TFNN. We're going back out to San Francisco. We're speaking with Glenn, and we're taking a look at the equity Hecla, HL. So, Glenn, if it did pull back into that 220-ish type area, 215 type area, what's your take? Do you want to take that heat?
Yeah, well, what I was thinking about doing, Steve, was moving my stop just around the 240 area, and if it pulled back and filled that gap, that's close to the 618 retracement, I would probably buy it again.
Okay.
And,
okay. So just want you now, breaking 248, that opens up the door for, the lower price likely. So this thing has done a 100% move of a move. We just come back to this little swing point out here from July 13th. And so, oftentimes an equity, when it does that, it will pull back or move sideways. I don't know which one this might do out here. There's really, and it completed an A to B equals CD. There's nothing negative that I see inside of Hecla. out here as we speak today. But I think what it's really important to, and so, yeah, that I see that 275 area, that 0.618. If gold continues to move higher, Heckler ought to move higher, and it could even decide to make the real 100% move of a move, which would be to get back to 335. I don't know that that's really in the cards at this stage of the game, but that is certainly, one of the target areas that Heckler could move up to. The concern that I would have, that I would just share with you, and I really won't know till today, later this afternoon, after Tom's show, but what I would share with you, and this is just the silver chart that you and I are taking a look at right now, and that is where I'm taking a look at the commitment of traders data for the large commercial traders out there. I find that either looking at the large commercial traders or the guys like maybe you and I that they refer to as non-reportables, like we're not good enough. But let's take a look at the commercial traders and what they're saying out here. And commercial traders, as a percentage of open interest, have always been net short. So what you and I need to do is evaluate that net short position. And what has happened for commercial traders over the last 2 weeks, this is a weekly chart that we're looking at, is they have ramped up to be more net short than less net short. At the bottom, if you take a look at my chart out here where I've got the blue diagonal lines, those are areas where, where the market has put in bottoms, where silver has put in bottoms. So as silver was making its low out here, the commercial traders were, in essence, the way of taking a look at it is less net short. Think of them as getting more long, I suppose would be one way to look at it. I have a feeling that based on what I took a look at over the last couple of weeks out here, that we're going to see the commercial traders' percentage of open interest get up to the upper threshold level. That's the red diagonal line at the top of my screen out here. And it's at that level where we have also seen significant highs, if you will, because we're basically seeing lower highs and lower lows inside the mining sector out here. So if the metals have so much more to run to the upside, the question we have to ask ourselves is, why are the commercial traders ramping up their net short positions so quickly, so rapidly out there? And I don't know the answer to that. I know that we're going to find out at some point in time. So you've got the right technique, adjust your stop. Be ready to buy it. I do think that gold is in the mining. I do think they're off the bottom, but look, we can't take our eye off the 8-ball out here. So that's the information I have to share with you, Glenn. I hope that helps you and assists you.
Very good. I appreciate your help, Steve.
Absolutely. So have a nice weekend, and thanks so much for calling in. And folks, stay tuned, because the extraordinary, the one and only David White, that huggably, squeezably soft, extraordinary human being, is going to be up next. And then I'll be back with you at 3 o'clock. We'll take a look at the markets from a longer term perspective. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.